Hey guys, it's Chad Larson with MLD Wealth. This is February's 2025's market update. Wow, it's Feb 5th already, so apologies a few days late. I think by the time we publish this, it'll take me another day or so. My goodness, we're a month and a bit into the new year off the back of making our 2025 outlook. Lots is changing, as lots does. This is probably one of probably going to be somewhat exciting, spastic market updates that we give. Just so much has happened, and to be expected. We saw the Trump administration take control of the White House, and here he goes. And I think there's a lot of topics. I'll kind of address them. There's DeepSeek. I'll talk about DeepSeek as a Chinese-based AI chat GPT look-alike that came to the market and gave the entire market a lesson in panic, caused a lot of turmoil over 2 weekends ago. We can talk tariffs as well, as Trump is heavy on the tariff train right now. I want to talk a little bit about Elon Musk and Doge, the Department of Government Efficiencies, just the sheer scale of what we're seeing down into the U.S. I'm going to talk about a book that I just finished writing. I'm in the process of publishing for clients and interested parties alike on alternative investing, which I'm very excited about. We'll talk a little bit about currency. Talk about some interest rate cuts and the capital gain deferral that was announced by the Trudeau government in the budget, and then post all his drama teacher-like events and proroguing the government. We'll get into that in a little bit, but this is a pretty wild one. So first off, DeepSeek happened kind of 2 weeks ago. DeepSeek was if you hadn't heard about it, good. It came and went very quickly, but boy, oh boy, did it cause, the markets to go into a little bit of a panic. And when I started the year out, it was very clear that we saw volatility on the horizon. We saw, stretched valuations. We saw, potential for upset to come into the marketplace and adjusted positionings as such. So, all is well when you're prepared, and that's just the nature of the market. Long story short, but what had happened with DeepSeek and why it caused markets to go into turmoil was, a very small, semi-unknown AI company called DeepSeek, based out of China, came to market with a competitor to ChatGPT and they'd launched the company with about $10 million of seed capital and 80 employees. And, 6 months later, they've got a ChatGPT killer, which, they really questioned the U.S. dominance in and around AI. You got stocks like NVIDIA, going to the moon on a bajillion multiples of valuation, and the whole market's just been drunk on itself and making its own booze at this point on the dominance in and around AI. And wouldn't it be weird to find out you were willing to pay 100 times earnings for a company that's had hundreds of billions of dollars poured into it, to find out that some kids can make it for about 10 million bucks and replace it? It really caused a little bit of a panic and an existential moment for the AI industry. And listen, that also caused things like gas stocks to correct and uranium stocks to correct. And lo and behold, how does that even make sense that any turmoil into an AI company would cause gas markets to roll over, or uranium companies to roll over? Like Cameco was down 15% intraday, like the day this DeepSeek announcement came out. There's an interesting book I read years and years and years ago, and it talked about, call it the peripheral ripples of the marketplace. And it was an interesting example about kind of 3D thinking, and something that I try to employ into daily life. 3D thinking, and nonlinear thinking tries to start at the potential outcomes of something and work your way back to see if you can answer the same question. Actually, a very good friend of mine, I was talking about him this morning with my team. He's one of my team's favorite clients. You know who you are. As I was explaining how his mind works sometimes, and how he'll start, when we have a question that we're trying to solve together or a decision to make, we start with the decision or hypothesis of what we think we're going to do, and then try to game out about what the net result could be. Whereas his mind kind of starts at what are all the outcomes that could come from this, and what guides the other side of this transaction, or what guides the motivations or the implications, the ramifications of anything, and works his way back up to determine if we even have the right question. I think so often we lead with we lead with our questions and expect different answers. A bit esoteric, but apologize as I digress. The impetus to talk about why I brought up like gas markets and uranium markets is one of the thematics that we looked at into this year is we do see the need for power. The AI takes a significant amount of electricity, and it is of a view of many astute investors going forward that we will be in a shortage of electricity. And so what are great ways to generate electricity? So we're bullish gas and we're bullish uranium. Nuclear power is a phenomenal source of generating electrical power. And so a lot of these trades were starting to percolate and bubble. And so the market very quickly, as a macro shift, said, okay, well, if it takes way less power to do AI and there's going to be advancements in it, we won't need as much power. So a lot of those short-term catalyst-driven trades just came off very quickly. So we're still very bullish gas domestically. We've been kind of shy on the oil side for a while. I've always made the commentary is that I don't like the commodity at these prices, but I love the equities. Speaking on the Canadian side, with $70 US oil and our dollar in the tank, guys are making a lot of money. Now, no, we can jump. I'm not going to jump right away into tariffs, but there's always risks in any part of the market. So, if I was a hedge fund, I'd short the commodity and be long the equities. I think there's a valuation gap, trade there, but there's always the risk, if the U.S. does go drill baby drill and rapidly, turns up production, that we see OPEC combat market share by increasing supply and hitting the price of oil. So, we're not super convicted on the oily names right now. It's kind of a decent little dovetail into tariffs. Obviously, it's a good friend of mine on one of my endless group chats brought together a really interesting meme. I think that's how we all communicate now. But it was a T-shirt that says, "I survived the trade war of February 3rd to February 3rd." We all woke up over the weekend and were worried what Trump was going to do, and Trudeau was in Poland, shaking hands of useless people, signing climate accord bills while our country was facing a very existential threat to our economy. Trump came in like Trump does, with a bulldozer, and effectively threatened to impose 25% tariffs into the U.S. The God bless Danielle Smith, some preemptive work on her part. We call her the prime minister in holding. While Trudeau hides and Pierre Poilievre gets ready to eventually, when Trudeau grows the stones to bring back government and call an election, where he's just in a holding pattern, probably just lining up his next gig, whatever he's going to do. But Danielle Smith had gone down to Mar-a-Lago and met with Trump and really kind of set the table. And so aside from the 25% threat of tariffs, at least at the onset of that, from some preemptive work that Danielle Smith had done, Trump had only attacked oil by 10%. That being said, by the time we could all wake up, one day in, he had also done the same thing to Mexico, by the way. Mexico renegotiated with him and put a pause to it for 1 month in the support of having, more border, troops on patrol at the border to protect the U.S. border. And interestingly enough, that was largely, one of the key promises he had made through his election is, and I had no idea about this. Canada is a major now manufacturer and supplier of fentanyl into the U.S. A recent super lab was just taken down by the RCMP of Canada. And in one of these super labs, they found, I believe it was 95 million lethal doses of fentanyl. And that's effectively enough to kill every Canadian twice. So it is a real problem. Trump's kind of had enough. It's all great for Canada to, act like its peaceful neighbor to the north. It's all great to be very passive, when you're, sit on top of the largest superpower in the world. But as Canada was really held to account. Do I agree with tariffs? No. Do I agree to free trade and allowing markets to find equilibrium? Absolutely. Taking aside all of this, you just have to understand that there's certain parts of a manufacturing chain that just can't be done competitively in certain markets. If labor's cheaper in Mexico, they're going to stamp, body panels, and sheet metal, and they're going to ship them up to the U.S. To be assembled. And global trade works that way. But as we've been talking for years now, the destruction of globalization has been ongoing, and so that's going to cause some concerns. But crisis averted. Listen, the market hates uncertainty. I circulated a note to clients on Monday, Tuesday, maybe. I'm just talking about how we've positioned, capital, through the threat of potential trade war favoring countries with more U.S. dollar exposure, et cetera, et cetera. So I'm very happy. Listen, the inclusion of alternative asset classes throughout periods of volatility more than sets tone, the reason and impetus, not as a pure source of alpha or total return driver, but the reduction of volatility across client portfolios. So super happy. So I said I'd talk a little bit about my buddy Elon Musk. I'm a fan. He's pretty unhinged and really doesn't care about public opinion. I know he doesn't say everything that everyone agrees with, but he's a very intelligent man. So Elon Musk, is the head of Doge. Definitely a tip of the hat and a play on the Doge coin, which is a useless crypto coin, which has become very popular as part of meme culture and has a market cap in tens and tens of billions. I have to fact check that right now, which I could, but Doge is actually a real thing. Any marginal utility? No, but it does actually have liquidity and market capitalization versus the price and the coins in circulation. Anyways, I digress. So Elon Musk, the Doge stands for Department of Government Efficiency, and he has been appointed by Trump to come in and look at departments like USAID, the Treasury Department, because for years, like the Department of Defense, the Pentagon, there hasn't been an effective audit. No one knows where the money goes. Like at no point would any of us want to invest in a public company or any investment if we didn't have transparency into their financial statements. And it's just been run amok for, not even just going to blame the Democrats here. There hasn't been a real look at government efficiency, in my short 44 years on this planet. But Elon Musk, very quickly as he goes, like, just remember, this is a guy that bought Twitter for $44 billion personally and fired 80% of the staff on the first day. And Twitter, or X as it's now called, remains, absolutely at the forefront of media distribution in the world and is running more profitably. So it's, you got to take notice. But anyway, within less than a month of coming in and looking at things like the Treasury Department, Elon Musk has come out and claimed that the Treasury Department has authorized fraudulent payments and questionable uses of federal tax dollars. And multiple payments that were fraudulent and to terrorist groups. And this government agency is the checkbook for congressionally approved payments, processing trillions in funds for the entirety of the federal government. The Doge team discovered, among other things, that payment approval officers at the Treasury were instructed to always approve payments, even to known fraudulent or terrorist groups. They literally never denied a payment in their entire career, not even once. That's scary. And to put that in perspective from a size. So, and listen, if you don't believe in conspiracy theories, at this point, and some of them, they're called spoiler alerts generally now. But, when you have the highest ranking Treasury official, David Lebrick, resigning rather than complying with a request by Doge for just access to audit where they spend trillions of dollars a year, why would career bureaucrats fear an audit? It's pretty wild. So he announced the other day he's already seen upwards of $1.7 trillion of annual spending that is effectively nearly unaccounted for or fraudulent. To put $1.7 trillion into perspective, the Canadian economy is around $2.5 trillion in size on an annual basis, our GDP. So it's almost like they found an extra Canada. The amount of money that they're wasting. That is a material amount of profitability and the ability to help balance the budget. So, good on Musk for going, deep in the paint with chasing down, rampant government spending and inefficiencies. I want to talk to you guys a little bit about a project that I'm very proud of. My summer intern turned part-time employee, turned full-time employee when he's done school this April, helped me with the project. But it's I wrote a book and I'm pretty excited. So it's in the process of being published right now, and so we've got a number of copies that we'll mail out to our clients. But it's called Beyond Traditional. It's unlocking the potential of alternative investments. It was called, I had a number of forewords from industry experts read it and provide commentary. It's listed as a comprehensive guide that educates readers on the vast potential and critical role of alternative investments in modern portfolios. So kind of some self promotion there. It was called by a gentleman who runs one of the largest private credit firms in the country. He commented, "Insightful and enlightening. This book is a must read for those looking to expand their understanding and leverage the power of alternative assets." So, listen, in a world where traditional investments alone, may not deliver the returns and security that affluent investors seek. Beyond Traditional, I wrote it to offer an insider's guide to the sophisticated world of alternative investing. So as I've drawn from over 2 decades of experience building one of Canada's most respected multifamily offices, and I try to demystify complex investment vehicles like private equity, hedge funds, real estate that were once really the exclusive domain of institutional investors. This comprehensive guide reveals how alternative investments can enhance portfolio diversification and provide protection against market volatility. So I'm quite excited about that. And so we'll hope to be able to publish that soon. There will be copies for e-readers. There'll be a digital copy as well as imprint copy. And from a compliance standpoint, I can't offer the book for sale because that'd be considered an outside business activity. Nor do I think anyone would really want to buy a boring textbook. But I'm quite proud of it. So we'll see how that kind of goes and plays down into the marketplace. One of the things we were going to talk about is currency. Listen, I've been pounding the table for a year, and even louder on my drum in the last little bit. We are buyers of the U.S. dollar. I know it hurts. We're seeing we're seeing better companies, better balance sheets, better opportunities, better yields. And the outlook for the Canadian dollar still remains quite glum. So we do expect, further weakness in the Canadian dollar. We do expect, on the other side of this, and this kind of winds back to the front part of the podcast, was that when the threats of tariffs, were real and they were going to come in, just never waste a good crisis. And there's lots of levers that the government could have pulled. They could have done some sort of stimulus, COVID-like, to boost the economy. They could aggressively cut rates, which would help things along. But we expect the Bank of Canada to cut again another 50 to 100 basis points. We run the risk, of inflation, poking its head up as well. But bringing interest rates down has been supportive for the economy, and it's not too little too late, but it's not far off from that comment. There's a lot of wood to chop, or of just garbage that's been put into place from Canada as an investable thesis, and so we remain very neutral. We're not bearish on Canada, we're just very neutral. As you've mentioned, we had an incredible run into the U.S. markets the last 2 years. We've brought down exposures to technology, and increased our exposure to value names and international names, and we'll continue to push that thesis. Interestingly enough, I've mentioned gold time and time, not time and time again. Like, I'm definitely not a gold bug, or even a heretic in that regard. But structurally and strategically, we had a decent sized position, and have recommended precious metals to clients across portfolios through models. And that started with just a position in bullion, and as we became more comfortable, kind of graduated down into global large caps, understanding that fund flow would cascade down that path first. XGD, the iShares, um, I'm not allowed to talk about individual securities, so just forget that. But simple ETFs in the space have done very well. We've graduated down market cap even further and taken looking at positions across the junior gold spectrum. Just seeing, while we've seen a historical run in the price of gold, the majors are puking free cash flow. Their balance sheets are in incredible shape. They have not announced massive increases to their capex, which leads to the thesis that we're probably entering into a large cycle of M&A. And so big guys buy smaller guys. So taking some of our profits down from the larger cap gold positions and buying into the mid tiers, we expect to be a favorable trade. So I'm quite excited about that. And the not the last thing by any stretch of the means, but one thing that I did want to kind of bring up, and you'll see a note circulated by my team, hopefully sometime this week. There's just been a flood of news, and at risk of fatiguing people from communications, I've just kind of held this off. But on January 31st, the Canadian government announced a deferral in the implementation of the previously proposed increase to the capital inclusions rate. That's a big mouthful to say. At the budget this year, Chrystia Freeland and the Trudeau government tried to jack the tax rates on capital gains, making capital gains less juicy as comparatively to interest income. And the reality is that this was originally set to take effect on June 25th. It's been postponed to January of 2026. And that only affects capital gains realized annually above 250,000, as well as capital gains realized by corporations and most types of trusts. So, it was, while Trudeau stepped down from government, decided to prorogue Parliament and basically put it into pause, and has no interest in reconvening until the Liberals find, a new leader to run. There's lots of conversation on the back of that, but we do need that change. But in this interim, when the budget wasn't passed in Parliament, how do you pass something that hasn't been a given royal assent through Parliament? So a group of industry went at the government as it was an illegal push on their parts, and so I'm happy that people carried that torch, and so as for now, no preemptive things need to happen until we see January 1st, 2026, or God willing, when the Paul Ave government comes in and starts to shake things up a little bit and make Canada great again. I think that's probably lots for today. As always, it's been an absolutely wild month. Excited. It's not that I don't have no concerns, but I just really feel there's always concerns. Always be cautious, trust but verify. But I'm really excited about a number of initiatives that the team has taken, just both from client service and both from congruency and consistency of service, and the results that we've been seeing have just tickled me pink. So it's been great. It's tax time, so to speak. We just went through TFSA RSP kind of contribution season and handled that, and the team's gearing up for tax reporting packages for clients, which is always a very busy time in and around our office. So the team's behind me, busy at work, but as always, any member of the MLD team here is available for you, or any of the people that are near and dear to you, as a trusted source of information or advice with respect to your finances. Thank you again so much for taking the time to listen. And if you need anything at all, please don't hesitate to reach out. Have a wonderful day, and we'll talk next month.